Hello everyone, myself Vaibhav. In today's session of Visual Jforex, I will be continuing with the demonstration of the algorithm development using the indicator named time series forecast. We had initiated the setup in a prior session and now I will be building on it. So let us now head to the Visual Jforex board which has been developed by the Dukascopy Bank SA. Here so far the instrument subscription has been done where the USD JPY is going to be the instrument of choice. The position amount, all positions defined at 0. Then I got these time series forecast blocks, two, one with the look back period of 1 and another with the look back period of 5. So we will be looking at the time interval of 1 hour and we will be comparing these output values to see whether the time series forecast values are on the rise or whether the values are in decline. Then to look at the immediate price action, I have also taken the get historical candle blocks of 15 minutes each with the look back period of 1 and 2 respectively. Then to make the entry point precise, I have also taken into consideration these 10 seconds candle. Here also the shift value is 1 and 2 to look at the immediate price action. Now in today's session, we will be adding the buy side requirement, and for that I will have to briefly explain to you the logic behind the buy side trade as and when it will be executed. As I had explained to you in prior session, the buy trade will happen whenever there is significant upward momentum in the price action. So for that we need the last 15-minute candle to have closed in green, that is its closing price should be above the opening price, and the prior candle should have closed with losses. It means it is in correction mode and now fresh buying momentum is coming back in, and also we need this time series forecast values, the TCF values, to be on the rise. So for that the TCF value with the look back period of 1 will be compared to the TCF with the shift value of 5, and we will see if these values are on the rise, and also this prior candle should have closed below the TCF and the immediate candle should have closed above it. So that is going to be the logic, and whenever these conditions will be fulfilled we will be initiating the trade on the market price. But to make sure there is enough of momentum, I am putting in one more condition of at least 3 pips difference between this opening value and the closing value for the last 15 minutes candle. So we will have to define that on the Visual Jforex board using the calculation expression, and then we will also have to look at the actual price difference. So I will take the mathematical components here, calculation expression, and here I will define default instrument pip size, and I will have to create a new variable. Let us name it minimum candle difference, and its value is going to be 3 pips, and we will do A1 into A2, and this will be minimum historical candle difference. Okay, and one more calculation expression block to look at the actual difference. For that I will have to take the historical candle values of candle 18, its closing price should be higher than the opening price by at least 3 pips. And to make sure that we can define it logically, we will have to look at the actual difference and then compare that value derived with this MHCD auto created variable candle 18 is close and open price A1 minus A2 actual difference. Okay, candle 18 candle close minus candle 18 candle open. So here we have defined these two conditions. For the sell side, we will define this condition later on. In case of sell side, we will need the open price to be greater than the closing price by 3 pips. And for that, we will have to do an inverted calculation, which we will do later on. So for the time being, this looks good to me. And now we bring in the logical component multiple action. For the time being, I will be joining it here so that the trade flow goes through, and we will leave out some space just in case required to add further blocks as and when we will be defining the sell side. Now let us get the if else statement blocks, and we need the line 13 to be greater than line 17. First input greater than second input. Then we need candle 18's closing to be greater than line 13. So this closing value needs to be greater than line 13. First input greater than second input. And candle 19's closing value. Here I think we will need to add one more TCF block with the shift value up to look at the relation between this historical candle with the look back period of 2 and the TCF at that point in time. So we can't really do the comparison between candle 19 and candle 13. So I will bring in indicator here. Okay, we'll disconnect this. This also need to change to 15 minutes. Shift value of 2. And now coming back to TCF and candle 19's closing value. Line 29 will be our second input and candle 19's close will be the first input. Logical block. close needs to be lower than line 29. Okay, and candle 19's closing value needs to be lower than its opening value. So here closing value needs to be less, and then we need the candle 18's closing value to be higher than opening value by at least 3 pips. So for that we will have to use these two calculations. All right, so with this we are almost close to the defining of the buy side. Now we will have to pinpoint the entry point for the initiation of the buy side trade. That we will do using the 10 seconds candles. So as and when the price will start to move above the last 15 minutes candle close value, the trade should be initiated, and for that we will take the help of these candle 20 and candle 21. So the candle 21, which has a look back period of 2, should have closed lower. So we will have to now take candle 21's close and compare it with the candle 18's close. It should have been less first input, less than second input, and candle 20 should close higher. Okay, this ACD needs to be greater than MHCD, and now all we will need is the trading component open at market, and this is going to be a buy trade. First input greater than second input, and here lot amount is going to be as per the equity. So whenever you are going to define this, make sure it is appropriate for the amount there in the account. Slippage 2 pips is good enough in most of the cases. Stop loss target price, as we are working on a 15 minutes time frame, I think the stop loss of 5 pips or 7 pips should be good enough. 5 pips I will be working with. and the take profit is going to be of 10 pips. To make sure the risk reward ratio is in the is 1:2 at the minimum. So that's it on the buy side, and here we are done. In next session I will demonstrate to you how we can define the conditions for the execution of the sell trade. So thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.